Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we've got another trade breakdown video for you, this time on pound NZD for roughly around 220 pips. I'll discuss all the reasons why I entered this trade, stop loss, entry, where I went break even, secure and partials, targets, management, reasons why I got in. So everything will be covered in this video. If you are enjoying the content here, guys, please be sure to drop a like on the video and also subscribe if you haven't done already as well. But yeah, guys, let's get into it. First, we'll get the replay tool out just so we can see my thought process going into the trade. But yeah, for pound NZD, it's just been very corrective. We've been moving to the downside in this very corrective descending channel. Have been a bit reluctant to trade it, a bit conservative until we see some real momentum coming back. I have tried to look to catch some of these minor lower highs, but it's been very tricky, not really clear entries. So I've stayed away. We did see a big push to the upside over here. So this is actually the first time I thought, okay, pound NZD starting to see some life coming back into it. We could actually be seeing a reversal here to the upside, because typically, price action like this is not sustainable. I did a video on market behavior talking about price action like this, and normally we do eventually get a breakout, whether down or up doesn't really matter, but most likely is to the upside, and then we can just follow that momentum when it comes. And so when I saw this break to the upside, I was like, cool, pound NZD looks like it's going to break to the upside. Let's look for some retracement to buy it back up. However, we didn't see that. The market impulsed up and impulsed back down and impulsed straight back below underneath the level. So this here was just a very clear fake out of the market. So I was actually looking to short on the retest of this structure here as price came back to the high of the channel. I didn't quite get my entry signal that I was looking for. It did play out pretty well, but unfortunately was unable to capitalize on that trade. However, because we are seeing some big moves to the downside and still the market kept bouncing up, and this time even more aggressively, it did start to paint the picture to me that, okay, pound NZD is probably not going to continue lower, and it's actually probably going to start pushing to the upside pretty soon. So I dropped to the weekly time frame, and I could see this wick area kind of building up. This pool of wicks every time on the weekly time frame, the market would open for the new week, push to the downside and fail to sustain price there, and by the end of the week it will pull back up and give us a wick. And it did that for like 7-8 weeks. I don't know how many weekly candles there are, but it looks about at least 7 or 8 wicks there. And the market tried to keep going bearish, but it kept failing. So this tells me there's a good possibility the market is now going to push to the upside. It's had numerous attempts to go lower, all failed. Most likely we are going to go higher. So taking that little bit of information from the weekly helped me paint the picture on the 4H a little bit more clearer. Again, 90% of my analysis is done on the 4H, where I'm looking for setups, entries, confluences, but I do look at the high time frames just for a bit more confidence and a bit more direction, and the weekly really helped me with that on this trade. So dropping back to the 4H time frame, we're waiting for the push to the upside. I'm not really no longer interested in shorting, even though we are still technically bearish, we're still trading in the channel, we're still getting lower lows and lower highs. I'm just not interested in the shorts anymore. I'm waiting for that bigger reversal. So after we finally got the break to the upside, which we finally got here, now I'm getting excited that I'm waiting for my entries to get long. More importantly, we have broken structure here as well. You can see here we had this high over there, formed that low, lower high, lower low. We had some equal highs here, and the market finally broke for that structure. Most importantly, this high here. Now we've got some new highs in the market. So this is telling me that not only have we broken out the channel, so the descending channel, not only have we broken out of that resistance, we've also created some new highs in this bearish structure, giving us bullish structure, the break of structure. As you can see, you've got the low here, high, higher low, high, higher low, and some new fresh highs. So now I'm waiting for the next higher low to form to capitalize on this opportunity and look for buys and targets back into that resistance up there on the left where we had that prior fake out. So my obvious area to look for entries is on the retest of this resistance. You can see how many times prices tried to break through the resistance here, failed every single time. So now I know there's a good possibility if we see some rejection here, the market is most likely going to push to the upside, give us that next higher low and continue going higher. However, that was not the case. The market actually did break underneath the level. If I press play, you can see the market did break underneath the level. So now this put a span in the works, because ideally you want to be buying above support. You want to be buying from support and selling from resistance. However, in this case scenario, the market actually broke underneath the level. I could have waited for the market to get back above the resistance level, but I entered before. for a number of reasons. The market was coming into a very good area on the lower time frames, good support on the hourly. We had this lovely 4H trend line here connecting these higher lows, and we also had a really nice retest of this Fibonacci coming to 0.618. 0.618, the market sat on that level really well, and is also respecting this trend line here, which was connecting all of these lower highs. So had good confidence here in that area, so I wasn't afraid to go long and hit the trigger. In a different day, I might have waited for price to break above that resistance, but my intuition told me that we most likely will break through the resistance anyway. If the market held the resistance, came back down against me, so be it. It was a stop loss. It really met my criteria. Had a lot of confluence for me. I'll be more than happy to take the stop loss on that trade, but I entered earlier on that candle there, actually on the hourly time frame. It was the same as the 4H though, so I entered on this candle here, which closed at 10 a.m, which obviously the 4H candle closed at 10 a.m as well, UK time. So I entered on that candle, and if I press play, you can see price was actually struggling to break through that resistance. So it wasn't looking too good when I was in the trade to begin with, but again, the analysis was still spot on in terms of my trading anyway. Not that it will always work out, but the analysis was still spot on in terms of confluence, even with confidence from the higher time frames. The area I'm trading from was all showing the same direction. So again, nothing crazy, just let the trade play out. That reminds me, I had my first take profit over here coming back into that resistance, and the second take profit, basically the end goal of the trade, was back up to that resistance around 1.93. So I just let the trade play out, and eventually grabbed some nice momentum and came into that resistance. I secured some profit, took some partials, and went to break even. And this is when I believe the weekly candle closed. So yeah, you can see the gap there in the market. So the weekly candle closed. If we go back to the weekly time frame, you can see, if I move this all out of the way, we had a really nice candlestick closer there. So the weekly kind of played out how we expected it to. You know, all this rejection here to the downside, all those wicks, the market every single week trying to push lower, failing to do so. You know, the probability is clearly to the upside. Sure, we might break to the downside, but most likely we'll break to the upside, and that's exactly what happened with this weekly candle. And after that strong candle, it closed nice and strong. Momentum's coming back into the market. I was anticipating follow through to the upside, back to some resistance here, more importantly, back to this level here. If I go to the 4H, you can see that level there was a really nice head and shoulder pattern, which happened not too long ago. Nice left shoulder, head, and the right shoulder. And right here is our neckline, which we broke through and never really got the retest of. So I've been looking for price to get the retest of. I remember when we did actually get the breakout, I was looking to short up here, never actually came there. So I'm looking for us to go and return to that level. This was my original target, so let me just press play. So yeah, it went in, hit the target, did pull back against me, but hit the target there, secured 90%, because that really is my target. I don't really look to push trades further than a 3 to 1 or 4 to 1 R. If I do, it's because I've taken most of my profit. I'm leaving a small amount to run on. So yeah, I took most of my profit there, and then I left 10% to run. And unfortunately for me, you can see the market was not too far away before it decided it wants to come back down and retrace again. So I'm still in the trade currently, still got a small position running, and hopefully we can see price continue higher. It's still respecting, you know, key support on the 4H time frame. That resistance turns support the market's respecting right now, and same with that trend line. So hopefully we can see a pushback to highs. If it doesn't, it comes back down, takes my remaining positions out of break even. Yeah, no love's lost with pound NZD. You're still happy with the trade. But yeah, that's currently the breakdown of the trade, guys. Again, management keeping it simple, utilizing one time frame, which is the 4H, you know, mapping out that time frame in full detail, building up confluence, building up a story. Sure, you can use higher time frames like I did with the weekly to help my decision making on the 4H, and sure, you can drop to low time frames if you want to maximize your risk reward as well, like I did with the hourly chart. But the key thing is you just want to keep it simple. Wait for a good opportunity on that time frame and then strike when it appears. So yeah, really decent trade there. Hopefully we can push to 1.96, but we will see. If you have learned something here today, guys, please be sure to leave a like and subscribe if you haven't done already. Thank you so much for watching the video, guys, and I'll catch you all in the next one.